Sean, welcome back again. A lot of things have changed since we've been in the studio. Let's kind of jump into it because, again, welcome back. I always love having you here. It's always good to have conversations. For those of you tuning in at this point, like we always talk a lot of business on stocks, especially with the way the market is and how it's so red and things of that nature. But one thing that I've noticed going through a lot of, your YouTube, your TikTok, your Instagram, people are always asking you where your money's going, like the investments that you're into. I imagine in a bearish market, you're not doing too much trading. I mean, by all means, correct me if I'm wrong, but what does Sean, like, what does it look like for you the next, let's just say 6, 12, 18 months when maybe it turns to a bullish market? And where do you see yourself trading and things like that?
Mm-hmm. The hardest thing that a lot of traders try to do at this moment is time the market. And timing the market is probably the worst mistake you can make. Because while we go off the statistics and while we've talked about that before in the past, saying that the average bear market is a 41% drop with 14 months, it's not going to follow that perfectly. And really the best thing to do is slowly add as the market falls. Because there's going to be a point that the market is up and you're going to say, I can't believe I missed it.
So dollar cost average.
Exactly. And that's what everyone really talks about, especially whenever I throw a video over on social media. A lot of experienced traders will always say that, average into the market. Now, the thing is, I would always average in while the S&P 500 is down at least 20%, because anything underneath 20%, we are technically in a bear market. And if you are willing to hold over time, you're going to be profitable. But it just comes down to the timing game and not being emotional. Understanding that it will come back on up and not letting others influence you. Because when you go on social media and you say, hey, I'm going to start getting in, there's going to be a ton of people that says, hey, you're getting at an awful time. This is different. I can't tell you how many times I hear that. This time's different. In 2001, internet bubble, this time's different. 2008, guys, this one's different. Oh, the pandemic, this one's different. And now, right now, inflation, everyone says, oh, this one's different. The market's going to come back up. It will. It's just a timing game. And the thing is, we can't play a timing game on 100% specifics. We can't say, I have all this cash right here. I'm waiting until it falls exactly 41% to put my money in, because there's going to maybe be 39%. Maybe it's going to be 32%. Maybe all of a sudden it goes down to 45%. You get scared, take your money out, and then you miss the run. Slowly add yourself in on good companies. And that's another huge question that a lot of traders always ask me. Where should I be investing right now? What should I be investing in? And a little secret that you should know is probably the worst secret of all time. There is no secret as what is the best company. Long-term investments shouldn't be risky. Long-term investments should be good, credible companies. There's no secret sauce right here that I would say, hey, put your money over in XYZ. No one knows about this. If no one knows about it, it's probably not a great company.
Probably a bad company.
When we're looking for day trades and momentum, sure, there may be a couple plays that are underneath the radar. But when people say, where should I put my money in? Let's put it in things that we know are going to produce over time. Let's put it in Apple. Let's put it in Amazon. Let's put it in Google. Let's put it in ETFs. Let's put it in the S&P 500, VOO. Let's make sure that we are going to have a return. And the best way to know is let's play an ETF, maybe the top 500 stocks in the United States. Things that have produced over time are things that are going to produce in the future. So if I know that a stock or an ETF has made 10% year over year for the past 50 years, that's a smart investment. But to say, hey, my uncle's cousin, Vinny, who works at a pizzeria, his cousin told him that we should go ahead and jump in XYZ, that's not a best play. Stop looking for the secret sauce and start looking for plays that we know are going to produce over time.
Sound like my family, because that's how I think a lot of people do it. My uncle said it, knows a guy over there whose brother's sister is on the floor, the exchange working at what? And at the end of the day, it's like to the 18th degree, it's like, all right, I'm going to throw $1,000 at something. So
I feel like everyone has a crazy uncle that knows something that apparently no one else knows. There's always one uncle that apparently knows something about the stock market that we've never heard before in our lives.
That's so true. But so then I have to ask you then, are you maybe not considering, or maybe you are changing? So you day trade. Everybody knows you're a day trader. You love the swings. I day trade every once in a while. I can't do the swings too fucking much, excuse my language, but you love the swings. Are you changing your position to a more longer term, maybe not so much day trading, but maybe holding them for a longer time? Or are you still day trading, but then on the same time taking profits and putting them into, I don't know, a reserve account or somewhere, in another account or something like that for these longer investments, so that when Amazon is ready to go back or things like that, you're ready to full launch and invest into there as well?
Yeah, well, right now at this moment, I have two different accounts. I'm going to have my long-term investment account and I have my day trading account. And every single day I wake up and I trade my day trading account. And then I'm really just doing my averaging slowly on my long-term investment account. And I do want the market to drop a little bit more. Right now, we are at a very delicate area. We're about to go into earnings season for the second quarter, seeing how things are going to be with inflation. And we have interest rates coming up at the end of July. So there's going to be a lot going on. And this is really a make or break in the market. So I am day trading nearly every single day, but I will tell you right now, when the market is down, I'm reducing my day tradings and reducing my risk. Last year, I was putting in over $100,000, $200,000, $300,000 on every single day trade I make.
I was like, Jesus Christ.
And that's when I was making upwards of 50, 60. I had 3 months last year that were over $100,000, which was insane. But this year, so far, every single trade that I put in is going to be roughly between $30,000 to $50,000. Because last year, I would be able to make maybe $10,000 on a trade. But if we try to do that during a bearish market, we could see much bigger losses. It's hard to get stocks to break out and consistently break out when there's more fear in the market. We need to understand that the stock market is so psychological based. So many traders don't realize that. We all wake up and we say to ourselves, what's the best company? What's the best EP ratio? What is that company going to do? What's that earnings report looking like? But at the end of the day, who moves stocks? We do. People buy them, they go up. People sell them, they go down. Everyone who's watching this right now has heard that we are moving towards a recession. And every single person listening to this right now is going to be a little bit more cautious, a little bit more fearful. We need to understand last year, everyone was just buying anything. Everyone was buying absolutely everything. And it definitely has changed. Even if you're a person that is still extremely bullish, someone who likes to throw their money in, get their money out there, we need to think about the overall population, what I call the mob, the majority of buyers, which we discussed. I know that the majority of buyers are going to be a little bit hesitant, just like I'm a little bit more hesitant, where I'm not throwing $300,000 in a trade, but I might be throwing $50,000 in a trade. So that means that we have less money in the market. Less money means we're going to have stronger resistance. Resistance is going to be essentially like a line where it's tough to break or get above. So let's say Apple comes up to the price of 150. A lot of times you'll see Apple come up to 150 and start turning at 150, just because that's an area that has bounced before in the past, or that's an area where it's turned before in the past. So a lot of traders, whenever it gets up to 150, will start selling, start taking profits, and start saying, hey, you know what? I'll look for a bounce when it starts coming back on down. But last year, we just break through resistance lines. The more buyers we have, the more money that is going into the market, the stronger a stock will be and will break through resistance. The more fear we have in the market, the more caution we have in the market, the more profit taking we have in the market. You need to understand stocks are probably going to have pullbacks. People are going to take profits quicker. People are going to start shorting plays. So we need to understand that it's not just about the company, it's not just about the country, but it's about the overall sentiment of the United States investors and how they're perceiving the stock market, where we may not see as many strong breakouts, and we need to be looking more for shorts and more for dip buys until we start getting that market to bounce on up. So again, we want to be shorting, dip buying, or if you want to do your long-term investments, that's just where we're slowly averaging in.
I see. That actually makes sense. I think you clarified a lot of stuff mentally too, because I'm always in my head like, well, what about this? What about that? Like everybody's talking supply chain. Obviously, supply chain has an effect on what's going on, but there's so much money circulating, and with the way inflation currently is right now, do you see, right? Because there's that fear, right? Like in the past, it's always hit a recession, and then, the biggest millionaires come out from a recession, so on and so forth. It's a tale as old as time. Everybody goes through it. What if this is the time, right? Like we just talked about it, like 2001.
What if this one's different?
Right. But like that idea, because it's frightening, right? Like somebody that's listening to this right now that like, and I feel like the people that are coming across these types of that, because you're a young guy, right? 28, right? You've invested, I think, overall, like, not profitable wise, just overall, like well over 10 to 15 million over the course of 7 to 8, how many years you've been involved. So for people that are listening to this that don't understand that are trying to get into trading but don't know where to go, can you explain why a recession in this terminology, right? Like for the market, why it's good to get in during a recession as opposed to waiting for it to hit the top? I hope I'm making sense when I'm explaining that.
No, yeah, I understand what you mean. And a lot of traders that don't know the markets, we discussed this a little bit last time, is just we have fear. Everyone's scared of recessions. You hear the recession, you run. You hear, again, losing your job. You hear interest rates moving on up. You hear, oh, people are getting laid on off. And there's so much fear in the market. But fear is when we have to start attacking. Stock trading almost is a game of opposites, where when we see massive climbs, that's where a lot of new traders get emotional and they have FOMO, the fear of missing out. So they start buying in. And that's usually when they're at the top. And right now, the market's dropping. But now everyone says, hey, don't trade. It's a very bad time. The market's falling. But this is the time you have to get in. It seems like we train ourselves as an inexperienced trader to always get in at the worst time. Oh, wait until the market's on up. And now it's at the up. Okay, let's buy them. Okay, well, now it's coming on down because it's overbought. Oh, don't buy in right now. Things are falling. Well, right now it's the cheapest. We have to get in. And that's where a lot of new traders catch themselves, buying in at the tops. That's where a lot of traders don't realize that you need to get in during the bottoms. And one of the biggest things that I see new traders happen, and probably a mistake that traders make, is a lot of new traders always just try to buy for breakouts. They buy looking for a stock to go on up. When people come up to me and they say, Deck, I'm just not a good stock trader, it's a whole bunch of baloney. When they say I'm not a good stock trader, I think about it as you coming up to me and saying, I'm not good at sports. Maybe you're not good at football. Maybe you're not good at baseball. Maybe you're not good at basketball. But I guarantee you I can find a sport you're good at. Let's try golf. Let's try croquet. Let's try volleyball. Let's try something, because we're going to find something that you are going to strive in. In stock trading, there could be dip buying, there could be shorting, there could be swing trading, there could be long-term investing, there could be options. We can look at ETFs, we can go to cryptocurrencies. We are going to find something that you will be successful in. And when you try just the one strategy over and over and over again, it's like you being 4'10" and trying to play lineman on a varsity football team. Unfortunately, that's just not for you. You're never going to be a great lineman on a varsity football team, you weighing 110 and lining up going against 300-pound people. It's just not your position. But hey, maybe you're super fast. Let's throw you on the outside and let's make you a wide receiver. Maybe again, you're super quick and we can put you as a running back. Maybe we could do something else with you, right? When in doubt, let's put you at water boy. Who knows? But the thing is, we can find a spot for you. And that's how you have to think about trading. So many traders say, hey, I want to buy stocks and I want them to break on up. I want to buy the next GameStop. I want to buy the next AMC. I want to find the stock that's at $5 and look for the one that goes up to 500. Well, instead of buying at that and always losing, why don't you just wait for the stock to go up to 500 and then we short it back on down? There's over 8,300 stocks available to trade right now. You know why I make so much money shorting? Because the answers are given to me. I love shorting because I don't ever wait for a stock or say to myself, okay, which out of the 8,000 is going to be the best one? I say, let's wait for the one to explode. And I know that's the one that's going to be coming back on down. Now, that's for penny stocks, of course. There's a lot of blue chips that actually do go up and be able to hold their gains, but not the penny stock world. So as a new trader, I want you to experiment. And that's why I always say paper trade first. Paper trading is fake trading. It's virtual trading. We have a fake bank account where we are going to see if we are going to be successful in the market testing out this strategy. And that's what I want every single trader to do. I understand when we first trade, all we want to do is make money. It is the hardest thing in the world to tell someone, hey, I know you've been saving on up, but let's again paper trade first. Everyone says, no, I want to get rich right now. I want to make money right now. I want to be able to profit right now. But we have to learn the strategies first. It makes no sense just throwing our money in and losing it all right away because we actually don't know how to trade yet. Lose all the fake money in the world, right? Back when I was in college, I had no money whatsoever. I came to you for money back in the day. And the thing was, I had to save up for an entire year. But I was so passionate, I was so dedicated to stock trading that all I said to myself was, hey, I want to learn. So when I do have the money, I'm going to be successful at it. I want to learn how to paper trade. I want to learn how to trade. I want to learn how to be successful in the stock market. And people say, oh, Deck, were you great when you first started? Guys, I was absolutely awful. Like I sucked at first. I was the worst trader in the world. You know why? Because I didn't know what I was doing. Learning how to trade is almost like learning a new language. We are so overwhelmed at first. It's so difficult to grasp. When someone says, okay, let's buy shares, short shares, use these indicators, VWAP, MACD, PE ratios, all this stuff, it's so overwhelming to try to grasp all that in one sitting. And by the first week and a half, traders just say to themselves, I can't comprehend it. I'm done. Same exact thing if you sit down and you try to learn Russian. I don't know anything about Russian. And I guarantee you the very first time I ever try to learn it, I'm going to say, I'm never going to get this. It's too confusing. But if you just keep showing up time after time after time again, you're going to get it. You will. And there's going to be that point where you do have that learning curve, where you start arching over and you start picking up little things. Then you start putting sentences together. Then you can respond back. Then you can maybe hear someone, understand what they want. Same exact thing in stock trading. You may not know everything week 1, week 2, month 1, month 2, but all of a sudden, it's going to click. And you might say, hey, I can build off this. And then you start building and building and building. I think most traders quit before they find a strategy that works for them. And also they quit when they find or feel like it's too overwhelming for them, when they don't understand if you just keep showing up every single day, you're going to get it. You're going to understand it, but you just have to keep pounding away. I think about it as like a muscle, right? When you go to the gym and you bench press, it's heavy, it's hard. And the thing is, you don't quit there. It's heavy and hard because your muscles are growing. Same exact thing. We're kind of overwhelming our brain where we're saying, hey, our brain doesn't understand this. Let's, again, put ourselves in an uncomfortable position and let our brain adapt to it. Just like when we go to a gym, we're lifting, we're bench pressing. We wake up the next day and say, wow, I'm sore. I don't want to go back. That hurt. Same exact thing where maybe we're learning and we're saying, wow, this is overwhelming. I don't understand it. But if you keep showing on up, guess what happens? You get more fit. Your muscles grow. Your mind is going to get more education. You're going to get more knowledge. And if you keep progressing, you're going to wake up 90 days from now looking absolutely jacked out of your mind. 90 days from now in the stock market, you're going to say to yourself, wow, I know what's going on. But who's willing to go past week one? Because week one is when you're the most sore. Week one is when you cut out the candy. Week one is you feel like this is going to be the longest, more 80 days of your life. Week one in the stock market, you haven't made any profit. 2 months in, you haven't seen any sort of gains. And you're saying to yourself, how in the world am I going to stick to it? You get to day 90, you see magical results.
I like that. I like how you the way you broke it apart, where it's like, listen, maybe day trading isn't your niche, or trading this way, but maybe dip buying is, or maybe this is, or maybe this or this or this, right? Like people, I think, jump into stock trading as like, yep, I have to get in and I have to get out. When in reality, it's like there's a whole world of trading that people should like break down, right? Like you might not be good at buying the dip, but who knows? Like you might be really good at ETF trading. Like, so like I like the way you just explained that. Like again, it's like light bulbs.
Hey, thanks, buddy.
Yeah, right. But you see what I mean? Like it's true, because a lot of people, it's I don't want to say it's dumbed down, but people, when they hear stock trading, like whenever I hear stock trading, I instantly go, Wall Street, exchange, hundreds of billions, trillions of dollars being traded.
Algorithms,
yeah,
math,
exactly.
And it's like,
and it's just like, hold on one second, is it really that much? Which it is, like, right, like in respect to it, like at a much deeper level, yes, but on the base of it, there's stock trading, and the same thing as everywhere else. Like gym, you hear gym, what is it? Well, you have chest, back, arms, tries, like the same thing. Stock trading, like you were saying, you know, shorts, long term, everything. So that was really good. One thing you did mention was cryptocurrency. And the last we spoke, you were getting, I don't want to say heavy into it, but you were starting to kind of allocate funds alongside of it, right? Like seeing the benefits of like Bitcoin and Ethereum and where that's going. So tell me about that. What are your thoughts on, obviously Bitcoin dipped below 20K since the last time we spoke. But it's kind of had that resistance there or support there right now. It's kind of going back up, but I don't know, man, talk to me about crypto. Like where's your head at? What coins are you, or tokens, and you know, where are you in? Where are you not in? What do you shy away from? What do you like?
Right now is a wonderful time. Right now is an absolutely amazing time for Bitcoin. You need to understand, Bitcoin at this moment is exactly like the dot-com bubble back in the early 2000s. Bitcoin is at the point where half of people are saying this is an amazing opportunity, and the other half of people are saying, oh, this is a scam. This was never going to last. This is an absolute bubble. I am not a person that is head over heels in love with Bitcoin, and I'm not a person who hates Bitcoin. If you talk bad about Bitcoin, I'm not going to show up at your house and slash your tires. There's obviously those cryptocurrency type of people out there. I just want to play what I see. And I think Bitcoin is going to be a forever currency. Let's relate it to the dot-com bubble back in 2000. We had some very popular companies, Amazon, eBay, Qualcomm. They all fell 80%, 60%, 50%.
Man, Jeff Bezos talks about that too. Like it literally hits like he was like bankrupt. Like, like literally bankrupt. It was like we were out the door in 2001.
Well, the internet showed up, and it was this new technology that no one's ever seen before. The internet showed up, and I know it's so hard to grasp. I remember growing up, and until I was probably like 7 years old. 7 years old is when we started getting the internet. I went down to my friend's house, Ryan Kearns. He had the internet. I remember coming home and saying, Mom, Dad, when are we going to get the internet? And they're like, oh, we don't need the internet. You know, the internet's for adults.
It's so weird to talk about because I remember that stuff too.
It's such a crazy like perspective. It's so crazy to even think about. And when the internet showed up, we are seeing something that is relatable to Bitcoin and what happened with cryptocurrencies, where everything exploded. So let's just think about this for a second. How wild last November was, how wild the fall was for the cryptocurrency world. We had Bitcoin going all the way up towards above 60,000. We had NFTs striving. And if you think about what we have spent our money on, over the past, let's say 6 months, it's so crazy because you know what? While I do believe Bitcoin is going to be around forever. Ethereum is going to be around forever. The top 5 cryptocurrencies are going to be around forever, but all these altcoins are going down to nothing. All these altcoins are going down to nothing. In the 2001, we saw again, all the main companies survive. The main companies went on huge rips. They came crashing on down, and over time, they were able to get back to where they were and break new record highs. But everything that just ran off the tails of the fumes of the internet bubble, those all crashed on down. I'm really sorry, guys. But unfortunately, if you are holding a coin based off some sort of fluffy animal, it's probably not going to be staying around very long. And the thing is, you need to stick with the top 5 cryptocurrencies. Let's just take a second on some of the NFTs that we have. People spent over...
Dick butts.
Hey, I don't know about that one.
It's like a thing. Like Logan Paul talks about it. Like, what's going on?
It's nuts. Let's think about this real quick. People spent over $3 million on pictures of rocks. Pet rocks. People were spending over $1 million on monkeys. People were spending over $2 million on these CryptoPunks. And those are probably, the CryptoPunks and Bored Apes, those are going to be around. Like the NFTs.
Because the utility behind it, though. Like they have like I see where you're going with that. That idea of like there is a reason. Like you're buying a Bored Ape, you're getting something with it. Like that has value.
Yes.
People are buying pictures of like taking pictures of cell phones and selling them for $30,000. And it's like, now you own this picture of a cell phone. Like, who the hell cares?
Yeah.
What are you talking about?
I mean, that's what we have to just kind of break it down to. Yes, NFTs are great. NFTs are going to have value behind them, but only the more popular ones. Bored Apes are going to be around. CryptoPunks, are going to be around. But unfortunately, these weird ones that are pictures of like hot dogs dressed up aren't going to be around. These weird animals like ant friends or whatever, they're not going to be around. And all these altcoins are going to go out of business. I think Bitcoin at this moment is going to be an amazing dip buying opportunity. I personally would like to see it underneath 15,000 to be able to start picking it on up. But over time, I think Bitcoin's going to be huge. Do I think we're going to use it down the line? Absolutely. If you go to Google and type in 2001 internet newspaper, there's literally newspapers out just saying internet was a fad, internet was a scam. And people are reading this saying, hey, the internet's done. Like we don't ever need it. I've never purchased anything with Bitcoin in my life. And that's just me being honest. But I do think it will be a lot more thrown into the mix down the line because we are going to use it. We are going to see it in the future. Stick with the popular cryptocurrencies. Stop going for the moonshots. The moonshots at this time are over with, but I can understand it. I even was falling into the hype. I was this close from purchasing a $250,000 property on the internet. The real estate property.
I remember I was like, what are you doing?
I was so close. I was so close to doing it because I was so caught up in it. Everyone was like anyone who bought an NFT could flip it for $4,000, $5,000, $10,000. Anyone who bought a Bored Ape was just making money hand over fist. Everyone was saying, "Oh, real estate on the internet was going to be the next big thing." And I do believe the metaverse could be something huge down the line. I just don't feel like we have the technology at this moment to actually catch up to what people believe it is at this time. Like we don't have, unfortunately, goggles that actually immerse you into a different world. Do I think it could come in about 10 years? Yes, but we just don't have that technology built at this moment.
Yeah, no, I do. I'm happy you brought that up too, like metaverse. Like, I don't know, man, there's something about it there that I really like. The whole Web3 and where everybody's going. Like for people that don't think it's a thing, like it's established, it's in motion. It's like it's at the point where it's like get with it or get lost. Yeah. Web3 is a thing, and it's going to be a thing, and it's always been a thing, right? Like it's not like someone's like Web3 and they're like, yeah, no, like that's not a thing. It's like nope, like it's been a thing since like the early 90s, and everything that's been going for the past 20 plus years has led up to this point. So it's happening with or without it. So it's that idea of getting with it or get lost.
Exactly. For those who do not know as well, we're really talking about the next stage of the internet.
Yes, next stage.
So the internet's been around now for probably about 25 to 30 years, I'm going to say.
More than that, I think. I think but like not to the consumer, not to the average consumer, like in the 70s and 80s, businesses to business, like the IBMs of the world. Yes. It's not like the mom and pop shops were using the internet.
Yes.
But like when the consumer started, like maybe early 90s, same thing with cell phones. Like 70s cell phones were around, but like if you had a cell phone, it was like
big deal.
Oh my God, like you have a phone now. It's if you don't have a phone, you're a weirdo. So, but that idea, like the next stage for like consumers to utilize and get involved, I want to say it's almost around the bend, and that's where I'm trying to get involved. I want to get before it hits there, right?
Yeah.
Like,
but the big issue is cryptocurrencies. The whole point of cryptocurrencies is we're trying to cut out the middleman. Yeah, we're trying to basically not have any sort of regulation. But we're seeing all these issues at this moment, aren't we? We're seeing all these rug pulls. We're seeing all these scams. We're seeing all these Ponzi schemes now. We're having problems. Yeah, I feel like a lot of people have been turned off, honestly, from cryptocurrencies from, let's say, the past 6 months because of all these issues of it not being regulated.
Do you think that they are turned off on it though? Sorry. And like, I like talking about crypto a lot.
Mm-hmm.
In a way, I feel like it's good because then it's like, great, keep going, keep falling for it. Because like, for example, if I was to talk about my dad and talk to crypto about him, he'll hear about a rug pull and be like, I told you so, blah, blah, blah. And it's like, right, but that's not the cryptocurrencies that we are referring to.
Mm-hmm.
We're talking about like the top 10s. Like there's a reason why I always say this to people. There's a reason why Ripple and XRP are being evaluated by the SEC. You can think about it however you want, but there's a reason why they're being looked at. We don't know the reasons. We're only being told the reasons from what the media is telling us, right? But there's a reason why the SEC is diving into it, and it's been a lawsuit for almost 2 years now. Like, there's a reason for it because eventually something's going to come out, and there's going to be, no matter what happens, you know, crypto can't go anywhere because it makes up what, like 3% of the entire GDP, like the world's GDP at this point. So you're not going to eliminate 3% of that. You can't do that. But that idea of like the SEC, the people that control money, is involved in it should, in my opinion, get people to go, oh, we got to bring attention to this. Like, we got to get involved in this. Like the BTCs and the Ethereums, like we need to be involved. Not the Shiba Inus and the stuff that Robinhood puts on their exchanges because they know they're going to turn a profit on it because they know it's the hype. Like these actual currencies that are going to have some sort of value to the world. That's what's intriguing. Like getting on board with it, and that's what's cool.
Well, let me ask you this. So, you know, and the thing is, you know, disclaimer, I like crypto, but I just want to open up, you know, for discussion.
Yeah.
So crypto, as we talked about, is not regulated any sort of way.
No.
And the majority of people don't want regulation. But with some issues that we see from these rug pulls, from scams, from Ponzi schemes.
It's calling for it.
Do you think it would be better if we had? It would almost be like this. If we got rid of police, people would say, oh, no police, I can do whatever I want. It feels nice to say I can do whatever I want until your car is broken into.
No, I agree. And that's what I like. And I'm happy you asked that question because it's an ongoing debate. Like the purpose of Bitcoin was to, you know, like when it came out and it was just to be separated from the man. Like you're your own person, you're this, that, and the other thing. And it's almost like the way that the world is going and the way that people are interpreting it, they're only highlighting the negative stuff to turn people off. So then people's mindset goes, well, hey, maybe it needs to be regulated. And then when the world finally comes to the agreement of we need to have crypto regulated, that's when shit might hit the fan. You see what I'm saying? Like, and obviously it sounds very conspiracy. It's just, you got to look at, in my opinion, the way things are going. Like people are saying it's a scam. It's this, rug pull that. Well, then just tell me why XRP is being investigated by the SEC for 2 years. And the reason why is because they were called a security when in reality it had nothing to do with security. And they're still in the investigation. And then part two is, well, if you're going for XRP, then why aren't you going after Bitcoin and Ethereum? Because they're the same thing. And no one has the answers to it. And no one wants to say something. But you are hearing rug pull this, people losing $5 million here. Whoever created this coin is off in the Maldives because he pulled out and they're giving it a negative light till eventually someone's going to come around and go, maybe crypto should be regulated and we can put it into, you know, it could be recognized. And then everybody goes, now it's accepted. Do you see what I'm saying? It's a weird way to look at it, but that's where I think crypto is. Like it's at that, I don't think of it that way. I would love to have free market. Like I would love to be able to be like, Deck, for here, like in order for us to do this, send me 30 XRP. Like, and I can then go downstairs and buy a beer for 30 XRP or whatever it's going to be. I would love that. That would be incredible. The problem is the powers that be don't want it to be until it's a necessity. I just want to get in before it becomes a necessity. And people that are listening to this, again, I'm not a crypto genius. Like, and I don't claim to be. I just want to get in so that when the time comes, I'm already ahead of the game. Yeah. Does that make sense?
Yeah, no, absolutely. I mean, it's exactly what we talked about. Bitcoin is going to be an asset that's going to be around for the next 100 years. It's going to be around for...
It's going to be forever.
Yeah.
Living on the internet.
Exactly. Bitcoin's going to be around forever. And the internet is going to evolve. Think about Bitcoin as the dot-com bubble. The dot-com bubble crashed. The main stocks stayed around. Amazon lived. eBay lived. Qualcomm lived. Bitcoin's going to survive. Ethereum's going to survive. We will see top 5 cryptocurrencies survive. You need to start getting involved when Bitcoin drops underneath 15,000 to 10,000. Hold it tight. We're going to see that rise back up in the future. Bitcoin's not a scam. We're not going to see it go back down to zero. You need to take advantage of these drops. And even if you believe, hey, I think Bitcoin is going back down to zero, you're still going to get a dip buy. There's going to be bounce
Someone's
plays.
going to buy. Listen, every person that's sitting there like is going to hit zero. I bet you the second it hits zero or $5, they're going to buy a bunch and go, well, who knows?
Everyone's going to be
what I
buying.
mean? That's why it's like, okay, like hey, no one's truly against Bitcoin. I don't think they're pissed off. They didn't get back in it in 2008 and then 2013 and then 16. Like that's where it comes from. But you're saying if it gets below 15, you're going to consider buying. What if it doesn't hit 15 and it starts heading up? Do you have a price point you want to get in on? I know that's I'm pulling teeth at this point, but
I probably wouldn't, to be honest. I mean, it's great. Like I don't want to be roasted on the internet.
No, I know.
But it's like I want to wait for my price.
No, of course, and that's what I mean. And that's a good thing though, because you have your price. Anybody that follows Sean and knows Sean, he's the first to tell you on the streams. He's the first to tell you every day. Like he has his point. He has his boundaries. He knows his rules. I remember watching you live one day and you were like, this is what's going to happen. I'm going to sell it here. It's going to go up a little bit more and then it's going to drop. I'm going to miss out on all this. And it was almost like simultaneously once when you took the loss, it went up and then it dipped and you were like, son of a gun. Like it was,
I knew it.
It's a TikTok, I'm pretty sure.
Yeah.
It's the funniest thing in regard because it's like, but because you're so dedicated and you're so focused on like, nope, like these are my rules. These are my morals. These are the rules I live by. And that's why we love it. So, lastly, before we go, again, I always end this with you. 6, 12, 18 months. Sean Dekmar, Tradecaster. Where do you see you? Where do you see Tradecaster? Or what are your hopes for Tradecaster? But ultimately for new traders coming into, you and are experiencing you for the first time, what do you hope they get out of it? And where do you see your end goals being?
Mm-hmm. Yeah, so I live stream every single day on Tradecaster. Every day, Monday through Friday, I wake up at 7 o'clock. We put on the live stream. I live stream all the way up towards around 12, 1. Then we have other top traders that are full-time traders, have made over 100,000, 200,000. We actually have Living Like Matt, who is only 19 years old, made over $3 million last year.
Crazy.
Insane. And we're actually reaching out to a lot of full-time option traders. I'm speaking to an option trader right now who made over $1 million last year, and he's going to start live streaming over on Tradecaster. So the most important thing for all of our members is to be able to have many different strategies to learn from different successful mentors, because I want to be able to teach you everything that I know to be successful, but I want you to be able to learn from our other traders as well and nitpick what you like. Don't try to just copy me. I don't want you to follow me. I want you to learn from me, learn from other traders that are in our community, and be able to develop your strategy that works best for you. So that's one of my favorite things about this community that we've grown. It's not just a chat where you sit there. We have over 4, 5, 6 different live streamers that you can watch, learn from, and see how they're able to be successful. Because a lot of our traders that are there, myself, Active Trader, AK47, Living Like Matt, Kush, these traders, they all do their own thing to be successful. And it all goes back down to finding your own strategy. So when you're on Tradecaster, you're able to view all these different streams and be able to learn and grow from them.
What do new people coming in expect to get coming into Tradecaster?
You're able to get everything that you need from A to Z. I always thought about before I started this community, what do I want to learn? I don't want to be upsell, get caught into a funnel and then get a $4,000 course at the end of it. That's not my goal. My goal is if you come to tradecaster.com, I'm going to tell you every answer that you ask me. If you say, hey, how do I find the best stocks? I'm going to tell you. If you say, hey, Sean, how do you short? I'm going to just give you a direct answer. We have over 300 hours of video library lessons. As we talked about, I live stream every single day for 5 hours. We have over 5 to 6 different live streamers that also do this full time. We're there to honestly help you. We're not going to sell you something. We're not going to tell you this or that. Just ask for the questions. We'll be direct with you.
Love that. Thank you, Sean, so much for coming, bud.
Of course, buddy. Thanks so much.
Of course.